Welcome back, viewers. You're watching India Tonight with me, Sumita, Kareer. Our top story, Modi stocks. Well, Clsa has released an interesting note on these Modi stocks, and it speaks of how 90% of these Modi stocks have outperformed in the past 6 months, and that's on the back of policy push by the government. They also share the list of the preferred picks as far as these stocks are concerned. My colleague Somi joining in with the highlights of this note, and then we'll go across to a guest tonight to discuss this further. Let's first take a look at what Somi has for us.
Well, to analyze or to get the sense of election excitement, what Clsa has done is they have analyzed the FNO universe, that is of 183 liquid stocks, and what they're seeing out of that is nearly half of the 54 companies which have are perceived as a direct beneficiary of PM Modi's policy are PSUs, and remarkably, nearly 90% of the Modi stocks have beaten the Nifty in the election-focused rally over the past 6 months, while 42% of the remaining stocks, while in the remaining half, if you see, only 42% of the stocks have outperformed. So, which means that 90% of the Modi stocks have outperformed, while 42% of the other stocks have outperformed in the last 6 months. And this may continue even going forward if there's a strong election result as per Clsa. Now, in the list, as per their analyst, L&T, ONGC, NHPC, NTPC, PFC, IGL, Mahanagar Gas, Bharti Airtel and Industars and Reliance Industries are the preferred Modi stocks as per their analysts. However, they are saying that this narrow election theme base may end in the month of June and July, and post that in the second half of 2024, they are expecting the market narrative to change, and they are believing, or they believe, that banks have the best risk-reward ratio for the second half of calendar year 2024. Now, they like banks for its growth like HDFC Bank, ICICI Bank, Axis Bank and IndusInd Bank, and these four banks are already a part of Clsa's India portfolio, and they're also saying that a clear pushback on the rate cut expectations has allowed banks in US to outperform, but Indian banks, if you see on a YTD basis, especially the private banks, have continued to underperform the market. And they're also saying that their analysts continue to like Bajaj Finance, Max Financial, Zomato and DMart, also apart from the banking sector that they have just mentioned, and they're expecting that to outperform in the second half of this calendar year 2024.
All right, let's now go across to our guest, Mayuresh Joshi, who's joining us live. He's the head of equity at Marketsmithindia. Thanks very much, Mayuresh, for joining us this evening on ET Now. Now, very interesting note coming in from Clsa just ahead of the counting. They say that 90% of these Modi stocks have outperformed the Nifty in the past 6 months. I want to first start with the basics. What are these stocks? What is meant by Modi stocks? And what do you really make of the note, the findings that Clsa has put out about the performance of these 54 stocks?
Evening, Sumita. No, I think so. The base premise for the Modi stocks is going to be the PS universe largely, because how the PS universe had performed largely over the past few decades, and even if valuations were very, very compelling, it was always the case that the PSU stocks will always be laggards compared to their private counterparts, assuming execution, assuming digitalization, so on and so forth. But in the last few years, what has really transpired across the universe, if you take PSU banks, if you take power as a space, defense as a space, commodities or metals as a space, infrastructure, capital goods as a space, or even oil and gas, I think a lot of structural reforms have transpired in the last few years, which have now started coming through in terms of numbers. So strong order books for players in the defense space, as an example, strong order books in terms of the renewable thrust that the government has put forth for a lot of the power beneficiaries. Banks have gone through a huge transformation in terms of asset quality pressures coming off, a lot of recognition done on the balance sheet in the last few years, and therefore the health of balance sheet has improved. So I think a large part of the universe largely belongs to the PSU space, where structurally I think a lot of reforms have taken place, and the tailwinds that this entire space had is getting reflected by numbers.
Right. So, Mayuresh, Clsa also mentioned some of these sectors that you've mentioned. PSU, of course, they say that it's going to outperform the rest. They also speak about consumption. They also speak about defense, telecom as well, autos as well. But are these sectors that you're also bullish on? What will be your picks, especially as far as, investing post-elections is concerned?
So from a Marketsmithindia perspective, our take is that domestic cyclicals will keep on doing well. Obviously, I think once the election mandate and the outcome is done on the 4th of June, the markets will look forward in terms of the agenda that the Modi government puts forth, the 100-day agenda, and what probably comes through the budget. Now, a big supporting factor has been the RBI dividend payout of almost 2.14 lakh crores. So the excess amount that can be used in terms of infrastructure growth, manufacturing growth, can be a huge impetus as far as the budget dynamics are concerned. And therefore, I think domestic focused sectors, the sectors related to infrastructure, manufacturing, a lot of spaces like banks, defense, power, because structurally, I think the reforms are still expected to continue. Let me give you a case in point. Renewables are expected to touch 500 gigawatts by 2032, which is a huge ask from the current rate. You're expected to see the natural gas pipelines extend from 6 to 15 odd percent in terms of consumption and laying of pipelines as well. You've got a lot of schemes that are happening in
Right.
terms of roads, highways, and airport construction. So domestic themes will continue doing well.
So you're basically being bullish on domestic themes, but let me also take you to Prime Minister Modi's comment. He's basically stated that how the stock market is really going to shoot up both post June 4th, and several of his cabinet ministers have also stated similar statements. I want to also understand from you the three brokerages yesterday which came out, including JM Financials as well. They are all pegging the BJP NDA number to be anywhere above 300. That is, the 300 plus seats is what they're expecting. But experts we've been also speaking to, they also say that some sort of a correction is poised to come in, some sort of a tapering is likely to happen. Some say that that could happen even to the tune of 15%. Do you agree? And what sort of a correction are we likely to see?
I'm not really sure on how the numbers will play out in the first place. So I think the market is going very enthusiastic, assuming that numbers will be on the higher side. Obviously, the last few days, jitters have kept in as far as the Indian markets are concerned, and that is understood. Volatility will creep in till we get the exit polls and the actual election outcome. However, I think unless the mandate is absolutely on the other side of the fence, a deep correction to the extent of 15 to 20% is probably ruled out. There will be some hiccups in the markets. Obviously, the broader markets are overheated at this juncture. As we see the broader markets at markets with a lot of stocks are in late stage basis, where I think a quarter or two of execution miss might actually derate these stocks. From the huge re-rating and the 5x, 10x returns that they have delivered. So I think one must be really picky and choosy out here at this juncture at all-time highs that we are trading. There are still decent pockets like domestic cyclicals, consumer discretionary, consumer staples that can do well. And the correction, if it does come through, will be healthy because liquidity is continuing. If there is a strong election mandate, in spite of whatever correction we probably get, and if the correction does come through, it will be a healthy sign for the markets as well. So I think structurally, Indian markets are poised both from a macro and a micro perspective to do well in FY25 as well, and that probably becomes a base case scenario.
Right, so you're of course speaking of a possible correction, but if we were to look at the S&P global ratings, that note that came in today that raises India's sovereign rating outlook to positive from stable. Other experts have also said that that India's growth story is not really dependent on any one political party, and most important point from that S&P note came in that it expects continuity in reforms to continue regardless of the election outcome. Then how do you see with what several market experts are really stating that whether there will be a correction if the Modi government doesn't come, that there might be a fall, etc. How do you see all of that?
The point here is again, irrespective of the outcome, I think the processes continue. So I think we've seen that in the past as well. So I think it's very difficult to reverse economic processes that have probably been put on track. And if that probably happens, I think there can be a huge FDI outflow, because I think no FDI probably likes processes being reversed in any sort of manner. But I don't think that is expected to happen. Irrespective of the outcome, I think the economic reform processes will continue. From a market standpoint, the only point that I'm trying to make it, if there is some sort of a correction, because there is so much of overheating in the broader markets, and markets are trading at forward multiple valuations which are at a premium, I think it will be a welcome sign for people who have probably missed out, because the India growth story probably continues both on macros and micros, which a lot of global markets are missing at this point of time. So I think structurally we've been very, very optimistic on the Indian growth story. Any correction, if it comes through, would be a welcome sign for investors to start probably accumulating good quality stocks.
All right, so you are essentially speaking of a short-term blip, right? I mean, speaking specifically of these Modi stocks or, the sectors that are expected to do well, what is your take on, what happens post June 4th?
No, so I think it's a very clear and a very strong mandate. I think you will see euphoria still continuing into the markets. But I think a lot of stocks, as I'm mentioning, are way above pivot levels as we see it. But I think a few pockets, as an example, a few of the PSU banks still are very, very attractive from a risk reward perspective. Valuations are not stretched even after the huge run up that we've probably seen. A few of the power names, in my opinion, can still do well, but you probably need some amount of declines on that one as well. A lot of stocks within the defense space, a lot of stocks within the other ancillary space have moved up quite significantly. So you need probably sharper corrections or deeper corrections there. Whether they will come or not is a different issue. But at this juncture, at least, I think if there is any sort of correction on PSU banks, any sort of correction on PSU power names, renewable names, I think that can be a good starting point.
Right. One final question, Mayuresh, before we let you go. What really is then your investing strategy for those who are looking their time horizon, who are extending the time horizon, I beg your pardon, on these stocks? I mean, CLSA says that, post a couple of months, investors are good to invest in these stocks, post which there might be a correction. What is your advice to those who are looking at extending their time horizon on these stocks?
So I think if anybody is holding on to these stocks, obviously you can continue holding. The only risk factor, as I see, is execution, because I think all the other elements are probably in place in terms of order book, revenue visibility, margins at which these orders are coming, and therefore I think if these companies falter themselves in terms of not executing well for a quarter or two, the kind of premium valuations that they're probably trading at might start coming off quite significantly, and therefore I think fresh investors probably need to watch out if that probably happens. Have some amount of patience for all these overheated pockets and spaces where valuations are through the roof. They need to definitely cool off at some point of time over the next few months. And if that happens, I think it's a welcome sign to start nibbling into these stocks. For investors holding on to these stocks from lower levels, continue holding, but monitor how their quarterly performances are happening and have your risk management practices in place as exit strategies, as we see it at Marketsmithindia as well.
All right, Mayuresh, we're completely out of time on this chat. Thank you very much in sharing your perspectives on these quote-unquote Modi stocks. So lots of anticipation and excitement as far as the stock market is concerned and what's going to happen post June 4th. Meanwhile,
if you like this video, then like, share and subscribe to ET Now.